Welcome, dear traders. It's Miki at Stichen and you're watching a recap of the Asian session. Stock markets in New Zealand and Australia entered the red zone. At the same time, Japanese shares climbed despite the downbeat sentiment on Wall Street. And the Asian session, China's GDP economic report, was in the spotlight. In March, the Chinese economy expanded by 2.2%. In annual terms, GDP grew by 4.5% in the first quarter. Apart from the figure of 2.9% in the fourth quarter, it was the highest indicator since the first quarter of last year. China is also the leading oil consumer in the world, so demand for oil is likely to rise amid the quick economic recovery in China. Retail sales also grew at the fastest pace in the last 2 years. They jumped to 10.6% from 3.5% in February. China's industrial production increased by 3.9% in March compared with 2.4% in January-February. Following the publication of a positive data, the National Bureau of Statistics of China stressed the difficulties the economy is facing now. In particular, the agency mentioned geopolitical woes, which hinder external demand. A shaky global economy and a low domestic demand may significantly slow down China's economic recovery. Despite those warnings, investors cheered China's macro stats. Asia-Pacific currencies also climbed. The yen consolidated in the range of 134.20 and 134.70 amid China's strong reports and the health of US crucial data. In the Asia session, the dollar-yen pair rose to 133.40. The bulls were trying really hard to keep the upper hand and continue a three-day winning streak, yet the yen managed to gain momentum. As a result, the pair retreated from 134.5, the highest level since March 15. And the yen was bolstered by comments from the Bank of Japan governor. They somewhat undermined the bullish run of the pair, although the regulator usually provides caution statements. Investors always find hints about the prospects of a monetary policy. For example, today Kazuo Ueda said that market interest rates are determined by various factors, including economy, enterprises, and market sentiment. This phrase could be perceived as a hint of possible changes in the monetary policy. At the same time, policymakers spoke in favor of a dovish stance taken 10 years ago. The central bank expects inflation to fall in the range of 1.6 and 1.9% by 2025. It means that it's likely to remain committed to an ultra-loose monetary policy for a longer period of time. However, a weak national currency increases energy costs and exerts pressure on local businesses. Given China's rapid GDP growth, the situation may become even worse. The world's second largest economy is sure to increase oil purchases. Boosting demand and prices, it means that Japan will have to deal with even higher energy prices. The US dollar also tumbled markedly in the morning. After falling to its early lows last week, it was able to slightly recover yesterday, especially after unexpectedly strong economic reports, and they signaled a high chance of further rate hikes. US government bonds advanced as well. Dollar bulls also regained ground. In the Asia session, the US currency made an attempt to it consolidated yesterday's high of 102.10. However, after the release of China's economic data, it fell to 101.70. Besides, there was also an increase in risk appetite, so it will be extremely hard for the greenback to maintain its weak bullish momentum. The US dollar index was moving in the bearish price corridor of 134.10 and 134.70, and the Australian dollar flexed muscles after dropping the greenback due to improved risk sentiment. The AUD-USD pair broke through the pivot level of 0.67. And there are plenty of other drivers for the Aussie today. Apart from China's upbeat macro stats, the pair grew amid hawkish rhetoric in the Reserve Bank of Australia's meeting minutes. They showed that at the previous meeting, policymakers considered another rate increase in April. However, after studying additional economic data and revising forecasts, the Reserve Bank of Australia decided to pause its run of rate hikes. At the same time, the watchdog made it clear that monetary policy may need to be tightened at subsequent meetings. It helped the Australian currency advance to 0.6739 and the AUD-USD pair rose by about 0.6% already. The Australian dollar is steadily climbing at the range of 0.6697 and 0.6742. However, after the release of the US housing market reports, the greenback may resume an upward movement. It may provide some short-term trading opportunities in the near future. The New Zealand dollar advanced as well as China's economy is recovering rapidly. Countries whose economy relies on a commodity export are sure to benefit from it. The Kiwi dollar pair rebounded today to 0.6213 from a monthly low of 0.6180. The Kiwi grew higher in the Asian and European sessions amid a weak US dollar and China's economic revival. It was moving in the price corridor of 0.6177 and 0.6217. And that's all for now. Please leave your comments down below. Don't miss our next video review and see you soon.